Good evening, this is Giuseppe Basile, I'm the analyst and trader. You can find at the blog fibstalker.com. I also post regularly on Twitter using the fibstalker nickname. Good evening, today is Sunday, August the 4th, 2013, and it's 22:10 p.m. Italian time. It's Toronto time. And in this video I'm going to review the daily chart for three pairs: the US dollar versus the Japanese yen, the US dollar versus Japanese yen, the euro versus Japanese yen, and the pound versus Japanese yen. So I'm going to start from the daily chart of the US dollar versus Japanese yen, which is what you see on the screen. You also see this line, broken blue line and blue lines and dark red lines. I want you to focus on the dark red lines. What we have at the moment, we have on the daily, we have support in the area started at 98.80, and we have a failure in the 98.47. I'll show you later on how I trace these lines. On the upside, we have resistance in the 99.50 area, and we have a failure level in the 100.01. Now, if price moves below this 98.47, then we could see a larger retracement, and actually we could even break the level of support that we identified on Friday, and that's the 97.60 level. So if we move lower, then this level is in jeopardy, and there is the possibility for it to break, and we could see price in the 96.70 area here. However, if this level of support, this area of support holds, and price keeps moving higher and breaks this 102 level, 101 level, as I showed you before, then there is the possibility of a continuation higher, and the target 103.30, which is the target of this area of support, a large area of support here, would be in place. Now I want to show you how I traced this internal level here. We have this support coming from 97.70, and we have a target in 103.30. So the daily support that is currently in play is traced from the lows in last week to highs of Friday, and this is an intermediate target at 153, which would be enough to break the other area of and level of failure for the bears, which are selling this market in the 99.50 area here, as we can see. So there is a battle here from bulls and bears on the daily, and we're going to see what is going to happen this week. We move lower and we retest this 97 level with the potential to move into the 96.70. We keep holding this level, we move higher, and if we break 100.01, then there is the potential to revisit previous highs. Moving to the euro versus the Japanese yen, we have a level of support which is very similar to what we are seeing on the US dollar versus Japanese yen here, and as we can see, this trace held. We saw participation in the 126.40 50 before the beginning of June. Then again price dipped into this area, but bulls were able to defend this 124.70, and price kept moving higher, and within this move higher that started at the beginning of June is still continuing throughout all June. We had an internal measured move. This is very important to notice. This is from lows to highs at the beginning of July, and as you can see, participation was to the pip here, with longs entering in 128.04 or 5, and the first target was it 132.50 area of target was it. So the next the next measure move was in place here, sorry, and but what happened is that bulls were not able to keep this market in its traditional measure move here. And as we can see, this figure is very important because this sets this market up, at least I anticipate, based on the information I have on program trading at the moment, that the 128.90 level is going to be retested, and this is something that we could see during this week or beginning of next week. So be very careful with longs in the EURJPY. Finally, to close, the pound JPY, it's in a slightly different situation, and actually the reason is I think this market, like the others, is still in a bull flag. What you see here is a bull flag. If you look at the overall move, we have this move higher, and this is a bull flag. Now flags are typically continuation patterns. Of course we don't know just yet, but I think it's very important to know this here. After we had this move lower, we had also an important level that bears were watching, and this was the 151.90 level, 85 level. And as you can see, this level acted as resistance twice during the mid of June, last part of June here, and eventually bulls kicked in and actually were able to push this price higher, and actually they were able to push this price right at the first target here, but still within this area of resistance. So bulls got their target, profit taking, bears the opportunity to sell this market, and the next measure move long didn't hold, but still and actually this is something very important, because bears were able to hold this market down. Bulls were not able anymore to support this market. But then what happened is that when price came up again, bears failed too. So this is the actual definition of a flag. When bulls are not able to sustain higher price and bears are not able to sustain lower price, then we have a lateral move, and in this move anything can happen. So I'll be very careful in this area. We know this is a level traded, so it's possible that this level could be retested, but it's also possible that this flag just resolves in a upward direction, and this will be comparable what we are seeing with what we are seeing in the US dollar as well as the euro. So I hope this review is interesting and is useful for your trading. I think it's very important to watch the US dollar versus Japanese yen next week, because we have very clear levels to watch and to act on. This video is part of my weekly newsletter. If you want to receive my newsletter, just subscribe on my blog, and the subscription takes only 10 seconds, and you will start receiving my newsletter with this weekly video and other daily updates. Thank you very much for your attention, and have a great trading week next week. Bye bye.